Hello, everybody, and welcome. I am so excited to have you all here today. I am Allison Cooper, CEO of Influencer Secrets Academy, and I am here today with Barbara from Your Tax Coach. And well, we're right in the middle of tax season here. And as influencers, we want to learn, what are things that we need to know as we are writing things off, filing taxes, all this good stuff. So we are going to dive into all of that today. I'm going to hand it over to you, Barbara. Please intro yourself and share a little bit about what you do with everybody.
Yeah, hi, I'm Barbara with Your Tax Coach, and I have been doing taxes. This is my 15th tax season, but I started Your Tax Coach in 2020 because I was just so tired of working at accounting firms that didn't help their clients. They didn't help them save money in taxes. It was just give us your numbers, we'll give you a tax return, and what you owe is what you owe. And I was like, there has to be a better way. Like, what if we work with these business owners all year round and help them save money on their taxes, not just file them? So that's why I started Your Tax Coach. We're a strategy firm. So we're here to save you money on your taxes, prepare your taxes correctly, and just like there for you for any communication that you might need, any question that pops up. You're at the car dealership and you're like, how do I buy this car in my business? We're here to help you and to help you feel empowered and educated instead of shameful and guilty that you don't know this stuff.
I love that. I love how you say tax strategy, because that's so awesome. And I feel like everybody needs that in their life for sure. Yeah. And not just thinking about it, Q1 as we're getting ready to file. Awesome. Well, I'm going to dive into our questions here. Number one, as an influencer, do I need to file an LLC, an S Corp, sole proprietor? You don't necessarily need to really file anything, but are these necessary?
I always like to say that you should have either your LLC or an S corporation. Do you have to have them in order to do business? No, you don't. But for liability protection, I love LLCs. Now, I'm not an attorney, but I do know how LLCs work, and they're there to protect you in case you're ever sued. Now, as an influencer, you might think that would never happen. We don't ever want it to happen, but like in my 15 years of doing this, I've seen crazy stuff happen. And so I always want our clients to be more protected than we even think that they want to be. But also, being an LLC can allow you to become an S corporation later. And what an S corporation does is it can save you over 15% in taxes. So if you're an influencer making $100K, that alone will save you $15,000 in taxes, like straight up 15K back in your pocket. So an S Corp is really important, but in most states, you have to have been an LLC first in order to then elect to be an S Corp. So we like people just to have their LLCs, whether they think they need it or not.
Got it. And is it easy to elect to become an S Corp, or is this a big process?
So it is an application with the IRS. So you have to apply. There are strict deadlines, like March 15th every year if you're wanting to elect, but there is a way to go back and retroactive your election up to 3 years and 75 days. But you should really use an accountant or tax strategist like our firm that knows how to put in the right language to get your application accepted. And then especially if you're trying to get a late election, really having like the expertise and knowledge to get it accepted the first time, I think is worth any fee that you might pay to do so.
Yeah, that's awesome. Good to know. So moving on, I know this is a big question for everybody. What are influencer related expenses that we are able to deduct from our taxes?
Well, first I'll start with what is income, because I think that this is missed a lot.
Mhm.
especially with influencers, because a lot of the time companies are shipping you items to talk about. And if you're given anything, that's taxable to you. So say someone is sending you makeup. Well, the fair market value of what that makeup would have cost is your income. Same with travel. We have a lot of travel bloggers as clients. And so if hotels are giving you free stays or airlines are giving you free flights, the cost of those things are actually income to you. So once
Mhm.
you're claiming the right income, then we can start claiming the right expenses, which, yes, if you are having to buy certain items in order for people to buy them from your link, then those are expenses. However, you can't deduct something if it's used personally. So a big example, we have a lot of clients that are bloggers for like interior design, for example. And so they'll like redo their living room with all new furniture. Well, you can't deduct those as expenses because you're using those items personally,
Mhm.
but you can still make money off of it, right? Like you can still link your couch and your rug and your fake plant and all of that and make money off of it. You just can't deduct it because you're using it personally and not just in your business. But otherwise, you can deduct all the things you're buying, like if you're linking your clothes and makeup and all these things. Yes, you can if you're not going to use them personally.
Got it. Got it. And also just FYI for everybody, Barbara has some really great freebies that are going to kind of guide you through all of this as well that I'll be sharing with you all. So you're not going to walk away with any questions unanswered here. Awesome. So how do I properly track and categorize my income and expenses?
Our favorite way, if you can, is through QuickBooks Online. So it's
Mhm.
like an online software. You're probably paying like $50 a month for it. And you're going to link all of your bank accounts, credit cards, payment processing systems, anything. You'll link it to there and it'll feed through all the transactions into your books. You then have to categorize it and make sure it's in the right, if it's income or expenses, what type of expenses, or you have a bookkeeper like our bookkeeping teams. So that's like ideal scenario. I know that not everyone, especially when they're first starting out, can have a software and not everyone can pay for a bookkeeper. So if you're not at that place yet, I recommend just keeping a spreadsheet and don't try to do QuickBooks yourself because you'll be further off than if you just use a spreadsheet. So just get like a Google Doc, Google spreadsheet, and start tracking anything that comes into your bank accounts, anything that goes out. And that way, at the end of the year, you can easily like tally up in total. But don't wait till the end of the year because what we see is that people that wait till the end of the year, they're not going to over expense. What you're going to do is you're going to miss expenses because you're just going to forget things that happened like a year before. So you're actually paying more in taxes by waiting because you're going to forget some things. So please try to have, I call it a money date every Friday, like before you're off for the day and like can go have your glass of wine. Have a money date with yourself. Like, okay, let's spend 30 minutes. I'm going to track all my income and expenses for this week. And then you don't have to think about it and stress about it over the weekend.
Love that tip, a money date. That's cute.
Yeah.
Awesome. Awesome. All right. So here's another big one that we get asked a lot. Do I need to pay estimated quarterly taxes?
You do if you owe in tax. So typically, if you didn't owe last year on your taxes, you're not going to have to pay estimated taxes this year. And you can like claim this checkbox on your tax return so you don't get penalties or interest if you do happen to owe this year. But it's based on last year's taxes and on your estimated income for this year. But a good rule of thumb, if you didn't owe last year, you don't have to pay it this year. If you know you're going to owe this year, like you just like exponentially grew your business,
Mhm.
one, congratulations, but two, let's say you're like, okay, I think I'm going to owe 10 grand. Then you want to divide the 10K by 4 payments, right? Quarterly payments. So you're going to make a $2,500 per quarter payment. Make sure you go through a .gov website, because if you just Google like IRS tax payment, all these other websites are going to come up and they'll either take your money, they're going to upcharge you to pay the IRS. So just go to irs.gov and pay them directly.
Great tip. When I share this, I'm going to make sure I put the direct link on there. Now, this is something that just popped in my head as you're saying that, because I sometimes will go ahead and not do it quarterly, but like if I have a project I get paid for, I'll immediately go to the IRS website and just pay what I know I owe for that project. Is that okay? Or is
You
that
can totally do that. My concern would be the IRS is not great on paperwork and administrative things. So my fear would be is if you have a lot of payments, they're going to lose track of one. And then you'll start getting all these notices because they can't true up your account. So one, I would hate for them to lose the payment. And then two, it could be like attributed to the wrong account, whether that's like maybe you accidentally clicked 2024 payment, but it was really a 2025. So the least I have to log in to the IRS and pay them, I think is the best.
Yes, no, I should probably just start doing it quarterly and leave it be.
But the way you're doing it is good in terms of like, you know that the money was paid and you know like you don't really have to save for it, but maybe you just do the same thing but you transfer it into like a high yield savings account and then pay that just quarterly. So then your money is making you money with the high yield and then you only have to pay it quarterly.
Oh, that's a really good tip. Love that. Love it. All right. So we already touched on gifted products and PR packages and the tax rules for that. So I'm going to jump to the next question. How should I handle brand payments if I'm working internationally?
Good question as well. So if you're an American citizen and you're getting paid by international companies, then you just report that as income, just like any other payment within the US. They just might have additional paperwork that they have to fill out on their tax returns, but it's not like you as the US influencer is going to have to pay taxes in that foreign country because you have no what's called nexus there. So you just have to pay US taxes, and that other company has to worry about all the paperwork and junk. So as long as you claim the income, you're good.
Awesome. That is great to know. Let's talk about hiring a little bit. Can I hire a family member as part of my business?
Yes, and we love involving spouses or kids in your business. So I'll touch on spouses real quick. There's like 3 ways to involve them in your business, and they each have different pros and cons. So 1, they can be an employee. 2, they can be on your board, like board of advisors or board of directors. Or 3, they can be a part owner. I personally love when they're a part owner, and it doesn't mean that it has to be 50-50. Like it can be 95% you, 5% them. But if they're a part owner, they get the best perks, such as now when they travel with you, all of their travel is a business deduction. You can add them to your retirement plans and double those deductions. When they're an employee, you get some of those benefits. The downside is if they ever need a business vehicle, that's taxable to them. So if you think you'll need another business vehicle, don't make them just an employee. And then a lot of times our clients will add them just as a board of advisor or board of director so that they can travel for board meetings, because you do have to have at least an annual board meeting in your business. But I like this rule because you can travel to like the Bahamas and have a board meeting, and now it's a deduction. So that's how I like spouses to be involved. With kids, and this has to be your own kids, doesn't count for grandkids, but there's a workaround for that. But this year, 2025, you can pay your children up to $15,000 a year, each kiddo, and have it be a business deduction in your business and tax-free to the child. So if you have 2 kiddos, that's $30,000. That's reducing your profit in the business, meaning saving you on taxes.
Yeah.
And then that's $30,000 that's in your kids' bank accounts that you can then use to fund their life that you're already probably paying for, like daycare or private school or clothing, books, toys, electronics, sports, traveling sports, all that can now be paid through their own bank accounts. And pro tip, if you are going to pay them, try to max out their Roth every year, because now they have a W-2. So they're able to contribute to a Roth IRA. And I did the calculations before. If you just did it one time, if you just maxed out their Roth once at $7K when they're little, one $7,000 contribution could be $600,000 at their retirement age. So imagine if you did that every year for them, how many millions of dollars they would have. So it's like a quick hack to make your kids millionaires.
Yes, I love it. I love a good hack. That's awesome. Great advice.
Yeah.
What percentage of my influencer income should I save for taxes? We kind of already talked about that a little bit.
Well, that's all going to depend on what your income is, and it's going to depend on how good your tax strategist is as well, because there can be 2 clients. One that's, they're both profiting $200K, and one is paying nothing in tax, and one is paying $120,000 in taxes.
Yeah.
And so it totally depends on what are your other income streams, what's your income as a family household, what deductions are you taking, how good is your tax strategist to make it so your taxes can get to 0, because anyone can pay 0 in taxes. It's just, are you being guided correctly, and do you know how to do that? So an average rule of thumb is to like keep 25% for taxes. But also, if you know you're working with us, like, that number is going to be way less. So it totally depends.
Awesome. I love that tip. All right. So the last question on my list here, and this is a big one. What do I do if I get audited as an influencer?
First, I would say don't freak out. I think a lot of people get a lot of anxiety. I still do if we get a letter from the IRS. But the first thing that will happen is you'll get a letter. So just know that the IRS will never call you. It's not going to be a text message like click on this link. There's a lot of scams out there right now, so just be careful. But if you do get a letter from the IRS, scan it to your accountant right away. Because the worst thing that can happen is you don't respond. So as soon as you don't respond by their due date, they're going to escalate the letter. So it could have been that the letter was just a question. And if you don't answer their question, they're going to be like, oh, well, we know that they're wrong and we're right. So now the question is going to turn into a field audit. And now that's when things like get escalated. So just don't ignore it. Send it to your accountant. We'll look at it. We'll send a response letter. And it's a lengthy process. Like the IRS doesn't do anything quickly. So just know that it'll take some time, but majority of the time the IRS is wrong. So just know that as well. In their system, it's all just like a matching system. So like if one number is off, it's going to like ping for a letter to be sent to you, but it's probably that there's something wrong with their computer system.
That's huge. That's a really, really good thing for everybody to know. Awesome. Awesome. Well, before we wrap up, I have one last thing. What is like for somebody who is just starting out, like what would you say is like the biggest takeaway that you need to get this going to have, set up tax success as an influencer right from the start?
Keep every receipt. A lot of times people think their bank statements count as a form of documentation or receipt, And the
Mhm.
IRS really doesn't like bank statements. They want to see itemized receipts of everything. So luckily now, if you're like an online influencer, most receipts are emailed to you. So like get an email folder that says like 2025 receipts and put it all in there, but keep all your receipts, track your income and expenses, and you'll be like far better than 80% of the business owners out there.
That's amazing. Great, great advice. Barbara, thank you so much for being here today. You have just given us such a wealth of knowledge. I know that I am going to walk away with some new learning, some new things, and I know that everybody else tuning in is definitely learning some new things as well. So thank you so much.
Thanks for having me.
Thank you. And I'm going to go ahead and say goodbye to our friends, everybody. Until next time, we'll talk to you soon.